Much, Peter. So, ladies and gentlemen, good morning to everyone. You are, of course, most welcome to the May breakfast meeting of our European Business Network, the EBN. I'll say again to those who don't know me, my name is Peter McIver. I'm the ambassador of Ireland here in Vilnius. I'm taking the floor again on this occasion because Ireland is the chair of the EBN for the 4-month period from March to June 2021. And we're delighted that, as was the case in our April meeting, we also have a guest speaker from Ireland on this occasion as well. So, ladies and gentlemen, our topic this morning is FinTech, Trends and Developments in 2021, which of course is an extremely important topic for all of us. This morning, the program is that we will begin with a presentation by Mr. Eoin Fitzgerald, Senior Development Advisor, FinTech at Enterprise Ireland in Dublin. After Eoin's presentation, we'll have a panel discussion on the key trends in FinTech over the next 12 months, and also an exchange of views on the trends that will have the most significant impacts over the next 3 years. I just mentioned the panelists before we start. They are Vytautas Karalevičius, the co-founder of Bankera, Egidijus Paleckis, the head of Digitalization and Advanced Analytics at Lietuvos Bankas, and finally, Liudas Kanapienis, co-founder and CEO of Ondato. However, before Eoin begins his presentation, I want to take this opportunity to introduce the most recent member of the European Business Network. His name is Gianluca Crosati, and I hope I've pronounced that properly, of MB Italici Vini Gustus, whose company operates an e-shop here in Lithuania, which can be accessed at www.bono.lt. So, of course, we're always delighted to have new members, delighted in particular to welcome Gianluca to the EBN. And as I say, before we begin our program, I'd like to ask him to introduce himself and his company to us. So if you're there, Gianluca, the floor is yours for a short presentation on your company.
Thank you. Thank you very much. Okay, let me share the presentation. Okay. Okay, do you see it?
Yes, we do.
Okay, perfect. So good morning, everybody. May I thank Mr. Peter for kind invitation, the Irish ambassador, and all EBN members and guests. It's really a pleasure and honor to be here, at least virtually. Okay, so let's start. First of all, who we are, a little bit our story and why we do what we do. It was back in 2007, first time I came to Lithuania, and I started to cooperate with an Italian wine distributor for the Baltic region. Time to time, the wish to rise up our business became strong. And after I met my actual lady and business partner, Ligita, in 2013, we started this journey. She always had this attraction for the Italian lifestyle and its culture. So together with my vision to create a business which could bring to the region some good products from Italy, gave us the motivation to start. My IT background, skills and experience in retail, combined with the Ligita knowledge of course, Lithuanian language, its root and tradition, helped us to come over to some obstacles and and start the journey. Then to open an e-shop or e-commerce, as you wish to call it, was a dream I had a long time ago, because I saw opportunities in the future, of course. So last time I have been in Vilnius already, unfortunately, I would say a year ago. I could meet the right partners which could help to put in place all ideas we had for the e-commerce. So which are main strategic partners for us? Of course, in e-commerce, the logistic partner and delivery partner must be the proper one for the goal you have. In this case, of course, we met, fortunately, two of our partners, which are NNL and Lead Cargo. I can name them because I think since they are a Lithuanian company, it's right to name them, and we have a strong partnership together. So NNL is specialized in warehousing our products, also in temperature control. Lead Cargo, they are specialized as well for temperature control, importing goods. For sure, suppliers in this project are probably the most important partners. And according to our philosophy, we always wanted to find suppliers which they could bring some competitive advantage, I would say. Mainly our suppliers are all family-owned business. Some are small, some are more structured, but all they bring some tradition in what they do, and to the products they create. So what are so far our product portfolio? As you see from pictures, which I put it a little bit, so we go from cheese, olive oil, coffee beans, some cakes, panettone, probably, you know, for Christmas, and other stuff. We therefore constantly add new products to our e-shop in order to make more interesting to our customers. Unfortunately, we cannot work yet with wine due of some Lithuanian law restrictions for the e-commerce. And here, I hope we will fix this. I mean, there is not something special we can do. I really honestly hope that Parliament one day we have a discussion for it, because we know that we don't bring wine eventually to make Lithuanians addicted to alcohol, but just because we think that it can bring some value to the culture, to the market. I mean, with the culture. So let's see what's happening. Where we operate and who we serve. Mainly our channel business is B2C, so final consumer. As you probably understood, we operate at the moment just in Lithuania for Lithuanian market. And yes, final consumer can be, of course, private companies as well institutions. What are our plans for the nearest future? Surely, with the help of e-commerce technology, we are going to re-export our products to other countries which are close to us. So, as you probably guess, all other Baltic states, Latvia, Estonia, Poland, important strategic market neighbors, and of course, the northern country. Step by step, we are heading to grow. So if you have a question, of course, I'm here. Thank you again for your attention, and we wait to see you at our e-shop.
Great. Well, thank you very much, Guy and Luca, for your presentation. We greatly enjoyed it, of course, and we wish you and your company every great success going into the future. Now,
thank you.
Now we have to move on to the main business of our meeting this morning, which is, of course, the FinTech industry. And to get the ball rolling, Eoin Fitzpatrick is going to make a presentation. Eoin is a senior advisor of FinTech at Enterprise Ireland in Dublin. For those who don't know, Enterprise Ireland is the Government of Ireland organisation which is responsible for the development and growth of Irish enterprises in world markets. It works in partnership with Irish enterprises to help them start, grow, innovate, and win export sales in global markets. In this way, Enterprise Ireland supports sustainable economic growth, regional development, and secure employment. Eoin himself is also the co-host of moneyneversleeps.ie and has a wide range of experience across all aspects of banking, from wealth to corporate and investment banking. He has developed a large network in the FinTech ecosystem, meeting with many startups, investors, and organizations in this space. Understanding the potential of the new technologies such as blockchain, machine learning, open architectures, etc., has enabled him to anticipate their impact and identify opportunities for financial institutions and for other key stakeholders. So, of course, we're very grateful to Eoin for his participation in this webinar this morning, particularly as Lithuania is 2 hours ahead of Irish time, which I think has meant a very early start for him. So thanks once again, Eoin, and the floor is now yours.
Thank you very much, Peter. That was a great intro. You covered off most of what I was going to say. Listen, it's great to be here. It is a bit early. I was up nice and early at 6 a.m. this morning, getting organised. But no, more than happy to help and appreciate the opportunity to have a conversation about FinTech, which is something I know and love and I'm actively involved in. So look, what I will do, I have a presentation. I'll go through it as quickly as possible. I'll skim over some of the pieces. It's a bit of a background to what I do and some of the background to FinTech, and then to open for questions at the end. And obviously we have a panel and everything. So just looking forward to having a discussion about FinTech for the next 45 minutes to an hour. So just bear with me now and I'll share my screen and make sure you can see what I have. Just let me know if you can see that there.
Yes.
Yeah, and you can see just the slides, not my notes.
No notes here.
Perfect. That's great. That's great. So listen, like I said, and just to introduce myself, I'm a senior advisor of FinTech and Enterprise Ireland. Peter obviously covered off what Enterprise Ireland do. I'm 4 years here now, next week actually, in Enterprise Ireland. Prior to that, I was product manager for overdraft in Deutsche Bank and kind of FinTech lead there in the transaction banking business. I was formerly head of underwriting in Future Finance. Future Finance is a large, well-funded Irish FinTech providing online lending to students in the UK and Germany. We kind of built up we raised over 150 million in debt and equity as a very small startup, growing to 70 people, 3 countries, doing over £500 million sterling worth of loans to students across 2 countries. And then prior to that, I would have worked in Barclays corporate, working with technology manufacturing companies, Irish technology manufacturing companies. And then, as Peter mentioned, I co-host Money Never Sleeps podcast, which is focused on fintech, financial services, kind of startups and founders and their journey. So we're fortunate enough, we've a decent following, 10,000 listeners a month across a number of countries. So look, I get the opportunity to talk to really interesting fintech companies out of Ireland and internationally. So for anyone that's interested, the link there is to the website. From an Enterprise Ireland point of view, we're a trade and development agency effectively helping Irish companies scale internationally. What most people may or may not be aware of is that we're actually one of the largest, or the most active, both in Europe and globally, VC firms. Whilst we don't necessarily like to reference ourselves as a venture capital firm, that is the majority of what we do is invest in companies by way of equity. So you can see there we do over 350 sort of active investments on any given year. We've a very strong we've got a very strong fintech investment pipeline over the last number of years. It's just a sample from 2017 relative to the large, US names that people are very familiar with, the likes of a Y Combinator. So we typically would do in the middle double digits, sort of 12 to 15 new fintech investments every year. Our portfolio at the moment is about 160 companies, so it covers all sorts of elements of fintech and financial services, all of the kind of subsectors that people would be familiar with. Just a sample of some of the companies that we work with, specifically in the payments space. Ireland has historically had a very strong kind of payments history with some of the larger companies there. RegTech, again, is a large section of our portfolio of that 160 companies I've mentioned. Financial software, for example. Actually, I have a slide here from FinTech Ireland, which is a private organization with a lot for fintech in the space, but it gives a kind of really good overview of, I suppose, fintech in general on the island of Ireland and all of the different kind of subsectors. So the majority of these companies here, there'd be some that are multinationals, but the majority would be Enterprise Ireland clients here. And like I said, it just gives a good flavour for the depth, I suppose, of the companies that we work with, the particular sectors that they're in. So look, what I wanted to do before we kind of got into some trends was just to give some kind of background, because I'm conscious there may be some people that aren't as familiar with it as I would be. So just specifically, I suppose, the Central Bank of Ireland has a very broad definition of fintech, combination of financial and technology. But effectively, we're talking about the use of technology to deliver financial services to consumers. So we were part of the FinTech census with Ernst & Young, which was run in 2018, 2019. And there's a broad definition of the kind of offerings that we would have covered. And I mean, a pretty simple way to explain it is it's everything other than a bank and an insurance company. It's primarily, so all the different types of providers and solutions there. But in order to kind of talk about FinTech, we're looking at what I'd like to call, I suppose, or what people would be familiar with over the last kind of 10 to 15 years where FinTech has kind of emerged. And it relates to the unbundling of a bank, this idea of unbundling. So it's the idea that startups have been attacking incumbents by effectively taking products that banks would have offered and was building better and cheaper alternatives. So this is, what we got here, I think it's Wells Fargo. But you could effectively take a version of this from any sort of bank in any jurisdiction, and you'll find multiple different players, both local and international, whereby they're providing those services. And that's really what the emergence of FinTech has been about in the last kind of 10 to 15 years. Again, it's that unbundling. It's companies providing the individual pieces or services that a bank would be offering. And it's been a very steady kind of growth in the level of investment in FinTech, whilst a number of other sectors would have kind of risen or fallen over the years, dependent on kind of macroeconomic factors. FinTech has kind of steadily increased its funding and the level of investment, even through, this is obviously up to Q3 2020, but throughout the course of COVID and the impact of that, there's still seen a significant volume of investment in FinTech, and it's expected to continue. Just to go through some of what I see as the drivers for change, I suppose, why has it emerged in the last number of years in the way it has? To me, it's this idea of what we call it a three-stream world. So the Western world of kind of legacy economies, the Asian world of growth economies, and the Southern hemisphere of innovation economies. So if you take legacy, for example, there's over 5,000 banks in the US. There was over 5,000 banks in the US at the end of 2017. There's over 1,800 banks in Germany, 35,000 branches. And it's this idea that, they're long established, large banking players in these economies that haven't had, I suppose, to innovate necessarily hugely over the last kind of 40 or 50 years. And it gives scope then to, they're built on the idea of payments, credit cards, traditional kind of payments and credit card solutions, rails. And it creates this opportunity then, it has created this opportunity for, I suppose, more innovative or nimble solutions to arise and to, I suppose, take market share from the banks. If you take then what I look at as the growth kind of economies of the East, where they are designed around this idea of small credit card penetration, it effectively went directly from cash to mobile payments, different types of ecosystems whereby you have the WeChat of the world where everything is mobile focused. They kind of skipped the credit card stage that the Western economies would have used and went straight to mobile. They're effectively what we consider banks and financial institutions of the internet age. They've all kind of arisen and really grown since the invention of the likes of Facebook, and all in the last kind of 10 to 15 years. And it significantly outweighs then, or significantly, I suppose, is far larger than what we typically see when we look at like the US. So this is just an example of the mobile payments market in China versus the US. So you can see a considerable, if you take the growth from 2011 now, or to what's forecast for kind of 2021, a considerable volume increase on the China side. And a lot of this, like I said, it's that the infrastructure, these are banks and financial institutions of the internet age. They're a really good example, I suppose, to compare it is the likes of Ant Financial. It has over 2 billion customers, 100 billion transactions a day. But a really key piece here is that last kind of bullet point, this idea of a system refresh every 3 to 4 years. So it's the idea that there's constant upgrades going on in the background of your mobile app or whatever it is that you're being provided, because they have the ability to, based on the systems that they would have built initially. And for example, I worked in Deutsche Bank for a number of years. Deutsche Bank has over 350 different IT systems, and it's based on obviously years of kind of acquiring new businesses, moving into new markets, and trying to integrate all of these pieces of technology together, versus the likes of an Ant Financial, where it has, I suppose, built one very, very well and very efficient kind of technology stack from the outset that it can upgrade, every 3 to 4 years, and it's as innovative and as valuable as it can be, and can provide as many different products and solutions. So, just to kind of wrap up on the Eastern economies and the innovation there, you take something like Singles Day, which was in 2020, that it's $74 billion of sales, relative to 9 billion for Black Friday, which I suppose we'd be more familiar with in the Western world. And then finally, in terms of, I suppose, the Southern Hemisphere and the idea of these innovation economies, this is, where we're talking about the rise of mobile payments and mobile wallet solutions in kind of developing and emerging economies. And this is driven, I suppose, by a couple of things, but primarily it's the fact that, the majority of the population lives on, in some countries, less than $2 a day. Which is, and the reality is that in a lot of these countries, then, you take Africa, for example, Middle Africa, only 53% kind of mobile connectivity relative to other kind of more established economies. There wasn't a market for financial services. The typical infrastructure that we would see in our own countries with banks and branches and, a large kind of workforce, there wasn't the demand for that or the desire to kind of roll out those solutions in a number of these countries, whereby you're dealing with customers who are living on possibly $2 a day. And it meant then that, mobile payments then in particular have been the kind of key. So if you look at mobile money customers, for example, the majority of the world's mobile money customers are in emerging economies. So there's incredible opportunity there. If you take, I'll give you 2 examples. So Nigeria is Africa's largest economy, but people typically there pay, despite it having the highest mobile penetration, only 6% of transactions are on mobile phones. But then over 60% of Nigerians don't have a bank account. So they don't have, so everything potentially can be done there. And then in comparison to, say, Kenya, for example, where 73% of the population of Kenya have a mobile payment account. M-Pesa, which is one of the largest kind of operators in the market there, has over 21 million active users. They carry out more than 17 million transactions a day. So again, I suppose it's this idea that there are different kind of streams to the world in terms of their I suppose level of maturity and the different kind of solutions and products that are offered, which is why you see from a trends and development, you see different trends, I suppose, being applied or being relevant in different markets. And just to kind of round out on the piece around the drivers for change, obviously emerging technologies has been one of the key players. You know, with artificial intelligence, blockchain. This idea about automation, 1 in 3 bank jobs will be automated by 2025. You know, just a couple of headlines here. Some of them, people be very familiar with some of them around this picture there, UBS ditching its massive trading floor and getting rid of a large kind of portion of customers. Deutsche Bank wants to replace workers with robots, this sort of thing. Another key kind of driver for change alongside the technology piece has been regulation. Specifically, and I suppose what has happened since 2008. This is Medici's research here. We're talking about over $300 billion of regulatory fines since the 2008 crisis. And you can see as the chart, it might appear small, but as that chart increases, you know, the level of documentation, the level of new regulatory regimes that need to be adhered to has significantly increased since 2008, which has created an opportunity in a number of ways. Obviously, we work with a lot of companies in the regulatory technology space, but it has posed a lot of challenges on already existing financial services players, which has meant that other operators that you would see offering financial services don't necessarily have to adhere to the same level of compliance and regulatory requirements that a standard traditional bank would have to adhere to. So just to set, like I said, a bit of context, I suppose, before I kind of look at some of the key trends. I just want to focus on 2 in particular in the context of, I suppose, 2020, 2021. The first one is this idea of what's called embedded finance, the idea that everyone is a FinTech. So if you recall, when we started, we were talking about the idea of the unbundling of a bank. Well, it has meant that because there are a number of different players offering different financial services, really what we've taken it from a stage of this idea of unbundling to what is now, I suppose, being referred to as this idea of atomizing. So it has meant that because a company can offer a financial services product or solution, you know, there's 100 different examples there of the different types of solutions that can all be offered in isolation, where it becomes interesting, where we're seeing a lot of development, or I suppose trend, that particular trend around the idea of embedded finance, whereby it allows companies that are not a financial services company to start offering financial services products. You know, and you only have to see it where you can start. You can go to, well, I know here I could go down to, let's say, Harvey Norman, for example, and I wanted to buy the latest Apple product. If I wanted to buy a Mac computer, I can buy it on. They now have a partnership with a lender that allows me to buy it in installments. So, you know, you could argue that by being able to offer more and more of those financial services products on the side, well, then effectively anyone can become a FinTech by offering kind of financial services products. You know, one of the key examples, I suppose, in this space would be Amazon. It's obviously out there as a huge player, but I suppose more specifically, it's how it is able to offer multiple different financial services products to its customer base whilst not being a financial services company. You know, and you'll see there, people would have been familiar with some, but there's an incredible amount of examples of the different financial services products that Amazon can offer. And where that is, I suppose, encroaching more and more in financial services then is if you continue in the Amazon example, you know, Amazon has over 82% of US households are Amazon Prime members. So, you know, there's over 100 million Amazon Prime members in the US alone. And what that means then is that they have an incredibly, I suppose, sticky customer base whereby they can offer them multiple products. And then slowly but surely, if you start bringing in kind of financial services products, then all of a sudden there's a very large customer base to offer their kind of lending solutions to. And you'll see it now yourself as you start, the next time you use Amazon, there'll be a number of different products as you're going through the kind of checkout phase. see that whereby you can take out an Amazon credit card, and right there at the kind of end checkout piece, that will reduce the cost of your purchases. So that's just one of the examples. There's plenty of others whereby, there's this older example around Starbucks, that it holds more customer cash by people topping up their Starbucks card. Look, using that example, it's from 2016 in terms of $1 billion. They don't actually, Starbucks don't report it now in the same way, so I don't have more up to date. But if you imagine the number of customers that the likes of a Starbucks would have, and the amount of customers that would preload their Starbucks card to use in store. Can you hear me okay?
Yes.
Yeah, sorry. So again, look, Starbucks is just an example there based on a simple idea of people topping up their kind of Starbucks card and using it in store, but it provides obviously various opportunities for them to provide all sorts of different solutions and products to customers on that basis. We talked about the different ways of payments. Again, you have what Google, Samsung, and Amazon Pay, or Apple Pay. Presumably, most people would have one of those solutions kind of integrated into their phone. I know I have a Samsung phone here beside me. I use Samsung Pay at certain times in the shop. Again, by rolling out that simple solution, you can see the number of kind of wallet users can rapidly grow, the number of different solutions then that can get offered through that actual integration in my phone. A good example, Apple announced back in August 2019, they were rolling out their Apple Card, their Apple kind of credit card, in partnership with Goldman Sachs. Apple were able to effectively lend out over $10 billion in credit on their Apple Card in that first month of launch. And just to put it in context, even in the US in 2019, the average credit card outstanding balances for Bank of America customers were a total of $94 billion. And that was for the entire Bank of America customer base. And Apple have been able to lend out that, nearly 10% of that in 1 month alone. And then, I suppose finally, be familiar, but with again, it comes back to this idea of, tech players, non-financial institutions with large customer bases being able to provide other kind of financial services products. So this year, or late last year and this year, we had the announcement of kind of WhatsApp Money and WhatsApp payments, which allowed people in certain markets to make payments within WhatsApp. So this was rolled out in 2 markets in particular, or piloted to roll out in 2 markets in particular. Initially, they looked to roll it out in Brazil. It got blocked initially by the Central Bank of Brazil whilst they had to get regulatory sign-off. And the other kind of pilot market that they were targeting was India. So India is Facebook WhatsApp's largest market. They have over 340 million users. And similarly, Brazil, of the over 200 million people living in Brazil, half of them are WhatsApp users. So you're talking about 2 markets where a company has a large customer base and is integrating a financial services product into that customer base, and automatically then has a very compelling, like in the WhatsApp example, especially in the Indian market, you have 340 million users making mobile payments, peer-to-peer payments. That's an incredibly both sticky and large volume financial services product that they now offer that can compete very heavily with the typical financial services solutions in the market. So that was kind of one of the trends. It's around this, like I said, this idea that everything is a fintech, that more and more companies outside of traditional financial services are starting to offer financial services products to their existing customer base. And then if you kind of take it a step further from that, the other kind of thing that we've seen, particularly in the last year, is this idea of the battle for the checkout. So the checkout page is seen as one of the most kind of sought after spaces in the e-commerce space due to its high value. So companies not only want to be the payment method used for completing a transaction, but they also want access to the data that can be acquired by allowing the transaction through their ecosystem. So one of the big things, obviously, on the back of COVID would have been that it acted as an accelerant for mobile and e-commerce kind of payments. So just even taking kind of mobile e-commerce payments in the last, and the way it's kind of grown since 2016, the last 5 years, we're talking about it's now, 72% as a share of total e-commerce. Another example, so marketplace sales accounts for a total of over nearly 60% of all global retail sales now occur through marketplaces. the likes of Amazon and these other marketplaces. And there are a number of players active in this space. I'll give you this example here. This is JD Sports. I think it was from their website, and you can see these are all of the payment options at the checkout. So I traditionally would have been used to going on to like the likes of a JD Sports or others and just putting in my card details and making a payment. Now there's 2, 4, 6, 8, 10 different options, different ways for me to pay at that checkout stage. So some of the names people will be very familiar with there with PayPal, Klarna, and some of these products, particularly what's called the buy now, pay later, which is effectively point of sale credit, which allows me to split out my payments into installments, have grown considerably in the last 5 years, but specifically in the last kind of 12 to 18 months. So Klarna, for example, has over 50 million customers. It's one of the fastest growing kind of payment options in the US market in particular. And again, it's that idea that as more and more people have been forced to spend online in the last 12 to 18 months, the number of companies offering payment solutions at the checkout has grown, and everyone is fighting to be that first kind of point of sale or checkout option because it's incredibly high value, but it also gives you the customer and the data, and it allows you then to upsell that customer with a whole load of other products. So you can imagine there are companies there that will start offering other payment solutions to those customers because they now have them as a customer at the checkout. So there, that's it for me, I suppose, specifically on the trends. And I appreciate I've gone through that fairly quickly. But again, I was trying to set some context as to kind of the different markets, the different reasons for some of the changes and what we've seen in particular in the last kind of 12 to 18 months as to what are the key kind of trends that will continue on for this year in particular. So look, I'm obviously open to questions or happy to kind of continue on. I'll stop sharing now and I'll join again. So listen, thank you for your time. Oh, I think you're on mute there, Peter.
Oh, sorry. Eoin, thank you very much for your fantastic presentation, which was really inspiring. We appreciate not only the Irish perspective you've brought to these issues, but also your sense of the global reach of FinTech at the moment and the innovations which are spreading, throughout the world. It was really fascinating. So thank you very much. Our time is quite short, so I am going to hand over to Ekaterina Yukaya, who is a member of the EBN board, as well as Chief Commercial Officer at Credit Info Lietuvos, who's going to moderate the panel discussion. And of course, it's up to Ekaterina, but she probably will include you in the Q&A part of the of our event today. Ekaterina, can I hand over to you now?
Absolutely, Peter. Thank you very much. Thank you, Eoin. And I actually have the first question to you. So regarding the challenges in the upcoming 3 years, what do you see the main, you mentioned the main trends, what would be the challenges for the fintechs?
I think it's still going to be regulation. So look, I specifically didn't reference cryptocurrency or any of that sort of stuff, but even if you take the buy now, pay later space, which has Klarna, which would be a very, very big name over here, obviously, that's not a regulated space. I'm talking about 50 million customers. They're doing multiple billions of revenue, but there is a big push in the US to regulate those types of customers, and it's going to be interesting to see what impact that has. So even continuing the Klarna example, they had over 200 million, I think in the last quarter, they had over 200 million of defaults, which is small relative to, I think, the 35 billion or whatever of transactions that they did. But still, you're offering credit to people without having to do the necessary credit checks that you would do if you were going to a bank or something. So, it'll be interesting to see what regulation in particular spaces will do to some of these companies that haven't had to deal with it in such a way yet.
Thanks a lot. And bridging out to our discussion, I have a beautiful participant here. It's Vytautas Karalevičius from the Bankera. the company that states that bank complicate things and we don't. So we'll see how it works. Egidijus Paleckis, also from the Bank of Lithuania. He's a head of Digitalization and Advanced Analytics. And Liudas, Kanapienis, founder and CEO of Ondato. So that's the cyber part of this pretty story. And that's very true that Eoin have mentioned. We recently see a lot of buzz about the fintechs, and of course we see a lot of bold proclamations that every company will be fintech company, right? But recently we also see that every company will be regtech company, and that's probably also is a challenge with the regulatory side. So how can startups, given the complexity of this situation and regulatory post-crisis financial regulation, compete and innovate in finance and banking? So what would be the trends and what would be the challenges for the upcoming 12 months and the 3-year span that we focus on our discussion? I welcome all the participants to say introductory words. And maybe we can start with Egidijus. Egidijus, you're a part of the Bank of Lithuania, and Bank of Lithuania actually is quite an active participant or partner for the fintech ecosystem. So what would be the focus from the Bank of Lithuania side?
Yeah, thank you, Katerina, and it's indeed very nice to be a part of this panel discussion. And thank you, Eoin, for a nice introduction and setting the scene. Well, as Eoin mentioned, it's like payments are basically now is fintech. This is what most people are relating at. And also he gave us good explanation and examples, why this trend could continue. But we also see that could be other fintech companies could emerge. It's like RegTech is a big opportunity, I guess, for many startups, as well as InsurTech and WealthTech, which are not that yet so popular, not in Lithuania, not globally, I guess, But there could be, the trend for that, probably not next 12 years, but maybe in 2 and 3 years, that more and more companies we will see, helping people to get insurance, and to really serving them in these directions as well. That's also, Katerina, as you mentioned, we are the regulators. We try to be very friendly regulator, but we also try to be this very strict regulator when it's needed, So we try to provide guidance for our fintech companies, that we know how to comply with regulation. We try to explain to them everything. But when it comes to something, what we don't see it to happen in the market, we are very strict, and we don't see, we are not afraid of revoking the licenses. And we want to make sure that, the license in Lithuania means that as a trademark of the quality. So this is like our goal and our, let's say, direction where we will be working for the next years.
Okay, that sounds really promising, from the fintech side. But also after the Eoin presentation, do you see that the same trends are relative for Lithuania, or maybe there are some peculiarities? There are some country-specific trends or challenges that are on the table at the moment. Are there any peculiarities working in Lithuania, or maybe specifically from Lithuania, because fintech usually has none or very limited boundaries regionally? I specifically would like to address this question to Vytautas Karalevičius, but also welcome any participant to answer.
Good morning, everyone. So actually, I see a couple of trends in the industry, but before that, I would actually like to catch up on the previous idea set that how small businesses can start with business in fintech and so on. So I think the idea which was made in the presentation by Fitzgerald, that actually the finance are being unbounded, and the small companies can actually take one part of the supply chain in finance and just focus on that and doing that, and then they can rely on the third parties as a network. So I think that's kind of the key thing which opens the opportunity for new businesses, and that's how the fintech is kind of using the technology to disrupt the finance but you don't have to be very, very big to offer these services. But actually, especially now, I see kind of a couple of trends, and they all are related to what it means about the unbounding. And like because my background is coming from the virtual currencies, from the cryptocurrencies, actually I can see like now a different trend compared to like the previous bubbles in the cryptocurrencies. While let's say back in 2013, everyone was saying that all the virtual currencies are very bad and like there's no future. In the next bubble, 2017, everyone was talking about like, yes, Bitcoin is bad, but blockchain is good, and let's move everything on blockchain. What we can see now, actually, that like more and more people are actually trying, and especially stakeholders, are starting to see that virtual currencies actually can be used for payments. For example, that even the trend of the central bank digital currencies, there's like a lot of public discussion about should like the central banks issue digital currencies and so on, and if they should, how we should do it. It actually shows that like the public sentiment moves towards that like cryptocurrencies are about the payments. And I think like a lot of trend will be actually at least to explore how the technology, at least the technology can be used for payments, or maybe how the cryptocurrency itself can be used for settlement payments, because on the other hand, it actually enables small service providers to make the payments without needing to depend on the large network, because the cryptocurrency is like an open source payment network. So I think that's one of the main trends. But like people will see more cryptocurrencies as payment options. Next one is actually about open banking. While we have it for a couple of years, the key problem we have is actually there is no standardized interfaces from the banks. So if you want to use open banking facility to offer some services to your clients by relying on the open banking offered by the different banks, you actually have to integrate every bank individually, which actually makes actually a bit of a complex problem. So I think like we will move to more like a trend, especially from the regulations, like it's gonna take a while, but banks will have to offer their open banking interface in a standardized way. So let's say if you integrate one bank, you will be able to scale and to offer the service all around Europe. So I think, and after that, we will see more innovation. What actually this open banking can lead like to create new products, which we can probably even cannot imagine now. Because now all open banking is actually just about integrating different APIs and like just working hardly to manage the different changes and just maintaining the system, because it's not standardized. And the third one, I think, which we are seeing now is more about the RegTech, but actually it's also about FinTech, because it's about the anti-money laundering perspective. So I think we are seeing that like anti-money laundering as a subject, let's say, is splitting in two parts. One way is more about being a bit more quantitative, when we're using the machine learning statistics and we are trying to automate and make like everything as efficient as possible. But on the other hand, it's not everything can be automated, because there's a lot of judgment and there's a lot of, how to say, like gut feeling, which has to be involved and experience. So I think like we are also gonna see like the branch of the qualitative ML emerging. Like now we have more or less of them both mixed, but I think we will have like people who will be focusing on one, but not the other one. We will have more like data scientists who will focus on the quantitative anti-money laundering policies, algorithms, and so on. While we will have like more people who are from a legal background who will not care about the algorithms, but who will be just doing the due diligence by looking in actual case and like making like this gut feeling and expert-based decision. So that's more or less all the trends I can see for the next 12 months.
Thanks a lot, Vytautai. You mentioned a very, very important several words like AML, anti-money laundering. And we also see that recently everything that comes with fintechs comes with a flood of acronyms, right? It's IQC, it's IoT, it's IML, it's 5G, and also QYC, right? And those acronyms are really not making our life easier, from the customer point of view. QYC, IML, Liudas, could you navigate us through those acronyms, and what do they mean for us, and why they are so important?
Hi everyone. Yeah, it's a pleasure to be here. So first of all, maybe Eoin, thanks for this fantastic overview. Basically, you mentioned all the things that and all the trends in the future. But very good question, Ekaterina, from your side. Like before that, all these questions like AML, KYC, and everything rest was more, let's say, localized with the traditional players and the industry, and basically people were not so familiar with that. On the one hand, on the other hand, what we can already see and feel with the trends is that even with the traditional financial industry, kind of people or so-called users or individuals and the business customers are kind of raising questions about the why to do some kind of know your customer procedure, or why some kind of compliance people are asking for some anti-money laundering related things and all this stuff. Yeah, so and because the other part of the trend is that everything is being tried to be as seamless as possible, and then requiring as less information as possible and all this stuff. And there's a really good one question that touched with Klarna, and it's actually there are quite a few, let's say, things with the unregulated or not so regulated industries, and when people get used to something, and then when everybody understands that the impact to the market is kind of becomes big enough, and then there is a need to regulate something, then of course people start asking questions, why to do that and all this stuff, and they don't want to do or provide some kind of information and everything. So so the general trend is basically in this field is that try to do everything as seamless as possible, basically for the end users or the end consumers. On the one hand, on the other hand, this expansion of the regulatory compliance and basically the requirements itself is just there, and it will happen anyway, and it will go across the verticals because it comes together with the expansion of the activities and the financial, especially financial inclusion in all of the services and the providers and the e-commerce and as such. So that's for sure, and that's what we also see as the trends, and more and more different verticals are applying the same rules as the financial industry as such.
But what does it actually mean for the final normal people or normal businesses? Will banking on 5G will be the same as banking of 4G, but just a little bit quicker or much more quicker, or will it fundamentally change the whole game? What is the meaning of those technologies? What does it really mean to the financial services and to businesses and to the customers?
So, but we have to understand that basically any technology is there just to make things more efficient. Yeah? So if we are talking about the same artificial intelligence, machine learning, whatever, like faster internet or something, it's just to make the things more efficient and sometimes more transparent. Yeah, so it really depends on the what kind of technologies and what purposes we are using for. So for the end consumers, the end users, it means that it should be done, let's say, more seamless in a more seamless way. Like if to compare that, so before, like I don't know, 10 years ago, an example, if you wanted to buy something online that is worth, I don't know, 1,000 euros, an example. So what you could do, either if you have some cash on your credit card or something, just use that, or to go then to some kind of financial institution to ask to lend you the money. So you had to do that physically. Then it means provide all the documents and all the stuff, to wait for the decision and everything. Yeah. So today you can use the buy now pay later service and just to order that, and it will be delivered. If you will order that in the morning, it will be delivered in the afternoon. So that's about the technology and about the enabling it happened, because just before that we couldn't imagine these kind of things happen. So that's what is happening, and in this process of the ordering this stuff in the morning and getting that in the afternoon, there's lots of the bunch of the things involved in that. Yeah. So from e-commerce possibilities, the speed of internet and all the stuff, and of course organizing the logistics and everything, but also with all the financial activity, you know, evaluation of your possibilities and everything on KYC process and everything that, you know, to ensure that there's no fraud or something like that and everything. So, and that is done in those, like, you know, few minutes. And so that's what the technology means for the end consumer.
So it actually means quicker everything. And on the macro picture, that means that we will generate GDP in a quicker way. So yeah, that's really good.
But one thing here to mention is that, yeah, sorry for missing that, but one general trend is that everyone is trying to get rid of the intermediaries. And what Vytautas mentioned about the blockchain technology usage and all this stuff, it's also related with that, because we're going from like centralized and, you know, intermediaries based infrastructures to non-intermediaries based infrastructures, like direct, you know, relationship within the consumers and the suppliers, and that's to have in mind if talking about, you know, some value generation, because it is a bit of the other type of economy in general.
That's a really fascinating trends. I really urge our participants to ask for the questions, you know, some kind of personalized question to our discussants. But before we receive them, I would like to ask Vytautas. Vytautas, maybe you have kind of practical advice how for the customer, from the customer point of view, how to navigate in this world that is flooded now with a lot of different service suppliers. And you mentioned that you're going towards directly to the customer. Previously, it was very easy, right? You have like 3 major banks plus maybe several extra banks that work on the more specific areas. Now it's a huge variety of everything. So how to understand how to navigate, except of course while using the Bankera services? Vytautas?
Yes. So can you specify the question one more time?
How to navigate in this world of a lot of fintechs and a lot of solutions from the business side?
Yes. So actually the point is, like, because businesses usually want to have like everything in one stop. So we need also to get like the loan, their main account, their payment cards, and also ideally like even the cards for the employees at one place. So that's why some fintechs are actually struggling to offer all of them, because we are great places, for example, to offering good loans at, for example, peer-to-peer loans and so on. We also like good companies that get helping to acquire payments, but not most of them are actually offering all the solutions. So while we Bankera, we try to actually have like everything under one roof, because we have the principal members of Visa, so we can offer the payment cards to our clients, and especially business clients. We also can offer the payment account not only for the separate transactions within Europe, but like also for international payments with multi-currency account. As well, we're also providing the loans for the businesses, especially for the risky ones, which are usually don't qualify for the bank loans because they are new ones and so on. Because we are willing to take a bit more risk, and we are more or less supporting for the small businesses, because we have from our recent experience knowing what it means to be a small business, and especially business which needs some money for the cash flow, not even like to buying the equipment, but especially when you need like money to run the cash flow and have like for the turnover. And as well, like it also like another thing, because all the businesses are moving digitally, the payment acquiring is also an important thing, and we're also helping our clients to accept the payments online. So more or less, we are trying to be one stop and help you to navigate all your financial needs in the digital world. And most especially, you can do it everything remotely. You don't even have to visit us, or you can open your account just by not leaving your office or your home, and you can just use all our services at comfort of your home.
Great. I see that the time is really running fast, but I really wanted to touch one more topic. With the fintech and unbundling the banks that Eoin have mentioned, we also see some recent trends with goodbye cash, right? And to some extent, goodbye privacy, which also is very much connected with the fintech rise. So could you just probably explain what does it mean also for the customers, because there had been quite a push to get rid of the cash over the past few years. And here I would definitely like to ask the position of the Bank of Lithuania, or the to what extent you can give it to us, and also to everybody in the discussion, should the customer should be okay with the tech companies and banks knowing everything we purchase, we spend, who we spend with this, selling the data and using it as a target of the advertisement. So Egidijus, we will start from you.
Yeah, probably I can start, and well, it's good that my background is in cash, I just recently become head of digitalization. So I can tell you that what is the ECB and like in general the Eurosystem position on cash, so which is recently published and agreed on its strategy, 2030 cash strategy. And we want to make sure that cash is still available, accessible, and competitive means of payments by that time. And we truly believe that it should be a customer choice. They should not be pushed out of, using cash and so on, but they should be their choice. If customers wants to use cash, if it's like better for them, for budgeting reasons and so on, it's fine. But of course, and this is a job, for fintech companies, usually fintech companies and also banks and so on, just to make electronic payments more convenient so that people would choose them, and we would use it because we really like. So that's that position of the European Central Bank and also national central banks in Europe.
Yeah, but again, cash provides some can provide something that digital payments cannot provide, right? Like ability to make offline and anonymous payments. And do you see that this trend will hold for upcoming years, or that would become so easy doing with the fintechs that everybody will just abandon cash?
Well, it's not only fintechs, it's also what Vytautas mentioned, that central bank digital currency is very hot topic among central bankers. And well, that's really, there are no decision yet if central banks, will issue, at least in Europe, there issue central bank digital currency. This is something comparable to, to payments and what fintechs are doing. And also that could replace cash in the future. People are, bankers are exploring, possibilities for anonymity, for offline payments, and trying to put all these good features of cash in online mode. Still, technology is developing. It's some things which are probably sometimes not possible today. They could be really, easily done, in 5 years. So I truly believe that, with all this anonymity, offline payments, and so on, could be solved. Maybe not now, but maybe in 5 years or something like that. And also, just would like to come back to what Vytautas also mentioned about the cryptocurrencies and central bank digital currencies. Just, I want to, highlight that that's completely different things, So don't you shouldn't even mention that in one sentence, when comparing two things, It's basically different, Maybe technology could be quite the same. We don't know yet, but from the government point of view, that's a completely different thing. And, it's like due to COVID now, the theme parks are, are closed. So the people who wants to get some adrenaline, we can invest in cryptocurrencies, So one day you can win, another day you can lose, 50% of your savings, So that's a bit nice way to get adrenaline, but it's a little bit also, we try to educate, people, also population and citizens that, it's not as safe, as like, general fiat currencies. So we have to be cautious about investing in cryptocurrencies.
Okay, Egidijus, noted. I see one hand, Peter, please.
This is David Conway here, for the Deputy Head of Mission at the Irish Embassy. I just have a question for Eoin, and it's something he touched on very briefly in terms of regulation, and then also cryptocurrency as well. And I'm just curious, how, from an Irish perspective, how is the likes of upcoming cryptocurrencies viewed? What are the upcoming regulations on it, or is it something that's basically being ignored in favor of other more traditional banking methods? Yeah, I was hoping I wouldn't get asked a cryptocurrency question. It's a difficult question, I know. I thought I'd throw it at you.
Well, sorry. So, Enterprise Ireland has a very specific policy around, we don't engage with companies in cryptocurrency space. Now we are engaged and we have some investments in companies in the tokenization of assets. So we understand the opportunity, but cryptocurrency specifically is not an area we're focused on. And look, it's a difficult one. My own kind of personal view is that, you know, Bitcoin and the likes at the moment, I don't see the real value yet in what they're doing. However, the idea of a currency that can be used within a certain environment, I absolutely think there's a lot of potential with that. So I think what Bitcoin and others will have done for the market and people's understanding and, you know, providing that breakthrough to get to the stage where whatever the next development of that kind of space is, I think that's really good for the kind of market. So, you know, that probably doesn't answer your question hugely, but even from a central bank point of view, I know Europe is looking at regulation around that. Like the Irish Central Bank will adopt whatever obviously Europe decides. So these areas are being looked at closely. But I think there's further a lot more kind of development and maturity to come in that particular space before it's something even us as an organization or even the market is probably kind of ready for to be more widely adopted.
Thanks a lot. And I'm moving already to the finalizing the discussion. But before that, one final question to every participant. So COVID impact on the fintechs. What do you see? What was the main impact on that? And also, can you just briefly comment on one opportunity and one challenge in upcoming 3 years for the fintech development? Egidijus, let's start from you.
Well, that's a difficult question, I would say. I think the main challenge would be further maturity of fintech companies and, you know, complying with regulations. And, you know, is what also Vytautas and Liudas mentioned, you know, increasing regulation. So that would be the main challenge for the companies. But also COVID, I think for fintech companies, it also give a lot of opportunities because more people, you know, started to use online services, which is basically where fintech companies are focusing. And, you know, once we learn how to do that, you know, they will, and fintech usually provides a good services for people, you know, we will save that. So there's, you know, I think that COVID opened, you know, many doors for fintech companies, and we will see, you know, growing markets.
Liudas, what do you think?
Yeah, so I will complement what Egidijus said, and basically, you know, in all the reports, it shows that COVID basically pushed forward the fintech basically development, and of course all the online and digital operations as such. Yeah, so that's for sure, and then basically there's no other way of doing that. But I would stress maybe another challenge as well. Is that, you know, since there are now so many choices and so many different solutions, so the other challenge will be actually how to stand out and how to become the first choice, because we all understand that it's in normal situation, as it was shown at the JD Sports, an example. So it's the same with other ones. If you have like 20 choices, I really spend a lot of time with the e-commerce. And it's just, I know that from the usability side, it just makes no sense, you know, to have so many choices because the churn rate of the users is too high. So it means that somebody will have to stay below the line. And the main challenge will be then to stay above the line.
Vytautai?
Yes. So the main thing, as our panel said, like that the COVID made more people to use online services and make their payments online. But I think like the biggest challenge and like the most interesting opportunity is going to rise from the open banking, because we have more or less the initial regulation there, and the banks are pushed to open their doors for different service providers. But I think it's still a bit of a mess because everyone is doing it in their own way. So I think like we will see probably not in the next 12 months, but probably in the next 3 years or 5 years, a new regulation coming more about standardization and having like more standardized protocols. And then like we will see more opportunities arising from having open banking being standardized. And then we'll see a lot of new innovation we cannot even dream today about.
Great. Eoin, your final comments.
Yes, look, I echo what everybody else has said. COVID has been an accelerant for fintech companies and digital and online spending and everything. So that's been great in that respect. Specifically on the challenges, I think, to echo what I said in the presentation, I think we will see more and more of the large kind of tech players, non-financial services players, just rolling out further kind of financial services products. And I think that's going to make them come up against the regulator more often. And you see it in the US, it's a political issue and they're looking to break up big tech and things like that. That will have a knock-on effect, because I think the more an Apple or others just start rolling out additional financial services products, the more they're going to become like a financial services player, and there's going to be some regulation there. So I think that'll be an interesting space to watch.
Thanks a lot. Thanks everyone for your very valuable inputs. It was a great discussion. I liked it a lot, really. I believe that our participant may have more questions, but unfortunately we are running out of time. So thank you very much again. And yeah, well, we see that data is the new oil. So we have a lot of data now. Let's feel a little bit more richer. Thank you.
Thanks. Goodbye.
Thank you very much.
Thanks.
Thank you all.
Thank you very much. Thank you very much.
Thank you very much. It was great. Thank you.
Thanks a lot for participants. Bye.